Welcome to the Future of Retail, a Roy Morgan business address. Since the beginning of 2022, with the worst of COVID behind us, including the end of lockdowns, we've all been waiting for a return to normal or a new normal to materialise. 2022 was meant to be the beginning of this new normal, but turned out to be anything but, thanks to a set of unprecedented conditions, good and bad colliding. It's looking like 2023 will be another transition year as the impact of new conditions materialise, which will determine just how far away we are from landing in a place which we might describe as normal when it comes to both the economy and spending growth. To build a picture of what this might look like, first let's take a closer look at what happened over COVID and in the last 12 months. We saw population change, big shifts, massive spending, online retail exploding, and trust in retail shifting. As we all know, COVID halted population growth following border closures and the pause on immigration. However, over 2022, population growth started to recover as migrants were welcomed back into the country, and we are now back to normal annual population growth trends. Meanwhile, domestic migration has increased as people move out of Sydney and Melbourne, headed for regional New South Wales, Victoria and Queensland, as well as Tasmania, likely driven by the search for more affordable housing. Outer urban areas of Sydney and Melbourne are also transforming as young, educated and affluent up-and-comers move further out. These are our Metrotech and aspirational Helix communities, who are most typically found in urban high-density areas, living in apartments. So to see them heading out to the outer suburbs is new, and this will have a lot of implications, including for the type of retail in these areas. The pattern is the same in Melbourne, with Metrotechs and aspirationals particularly heading to new housing developments to drive growth. Household incomes in Australia continue to rise. Young couple and young single households had the greatest growth in income over the last 4 years. Interestingly, young couple households are now the highest earning household type in Australia, overtaking midlife families. Most of the changes triggered by COVID stuck. Predictably, COVID ramped up time spent online, and this stuck. Now almost half the population spends more than 24 hours a week online. But what's most interesting about this is that this is a permanent behaviour change. That blue line is still very stable in the recent year, despite lockdowns being a thing of the past. The key driver of this hike in heavy internet usage is older people who are now starting to catch up to younger people. COVID also ramped up time spent on social media, and this too has stuck. More than a quarter of the population is now a heavy social media user, spending 8 hours or more a week on social, and this is up by 26%. It's the same story in terms of older Australians catching up with younger people. Now let's take a look at Australians shopping online. The surge in people shopping online over COVID also stuck, still hovering around peak level. In other words, 6 in 10 people still shop online regularly. This looks different by age, with 25 to 34s the biggest online shoppers. Almost 7 in 10 are buying at least once in an average 4 weeks. In what seems to be the same pattern, here we have older people growing the most when it comes to shopping online. The work from home hybrid is the new normal, disrupting shopping patterns. In Sydney and Melbourne, which have the biggest population of white-collar workers, 1 in 3 workers are still working from home some of the time. Roy Morgan people movement data reveals that retail hubs in Sydney and Melbourne CBDs have transformed into buzzing weekend shopping destinations. The reverse has happened in the suburbs with high work from home, where consumers are visiting local shopping centres more often during weekdays thanks to the convenience of being close by. Economically, where are we right now? Consumer confidence, drawn from the ANZ Roy Morgan Confidence Index, is at GFC lows and mortgage stress is on the rise. driven by record inflation, currently at 7.8%, and the highest interest rates we've seen since 2012, following 10 consecutive monthly rate rises. The Roy Morgan Mortgage Stress Indicator has increased to its highest since April 2012, with 24.9% of mortgage holders now at risk. Who is in mortgage stress right now? Mostly those with new loans. 74.2% of people in mortgage stress took their loan out recently in the last 6 years. They are more likely to be young single and young parent households, and twice as likely to be single income households. However, looking ahead to 2023, it's likely that the percentage of mortgage holders in stress will expand as many roll out of fixed interest rate terms. Despite these pressures, GDP and wages are still growing. Indeed, annual wage growth for 2022 is at its highest since 2012, and retail sales were still ahead of inflation at the end of last year. Paradoxically, Australians spent their way through COVID, culminating in an unprecedented splurge in the last 12 months, despite low consumer confidence. Australians have been on a retail spending spree since the COVID pandemic began, with spending on retail up 25% since mid-2019, averaging out at 8% per year, which is well outpacing inflation and normal retail spending growth of 2 to 3%. The paradox is, while consumer confidence has been highly volatile since 2020, over the last year it has dived dramatically, breaking the nexus between retail spending and consumer confidence. The red line is non-food retail spending, the blue line is consumer confidence. So how could retail sales remain so high while consumer confidence was so low? In addition to strong employment, over $300 billion of government stimulus initially drove household savings, and that fueled retail spending in 2022. Over COVID, spending on travel dropped by 70% or $35 billion, also boosting household savings and then spending. Fast and instant access to money via buy now, pay later platforms also contributed to the spending surge. So what did we spend our retail dollars on? During COVID, spending shifted dramatically to things for the home. That's the light blue line, reversing the long-term trend where we would spend on experiences over material things. Also last year, spending on going out and clothing increased, the two key categories with the most COVID pent-up demand and the drivers of the overall surge in retail sales for 2022. Unsurprisingly, therefore, business confidence is high amongst large and medium-sized retailers compared to micro businesses, which sit well below the average. Physical stores have roared back to life, but online non-food retail sales continue to grow. Overall, last year, Australians spent close to $200 billion on non-food retail spending. In a return to traditional bricks and mortar retailing, Australians made an estimated 1.3 billion trips to physical stores last year. Retail visits in 2022 caught up to pre-COVID levels, 1.3 billion. However, as we all know, retail visitation has been in decline for a decade. But there was still plenty of shopping done online in 2022. In fact, the return to physical stores did not come at the expense of online shopping. In 2022, $65.2 billion retail dollars were spent online. That's up 10% from $59.3 billion in 2021. Online non-food retail sales have almost tripled since 2019, with the biggest growth over 2020 and 2021 as expected. So the retail spending surge of 2022 came from both online and physical stores. Australians shopped more across both channels. Now, an estimated 34% of total non-food retail comes from online, down from the peak of 2021, but still much higher than pre-COVID. In particular, this cements the permanence of omnichannel. And to that end, you can see that everyone is winning from the growth of online. Omnichannel retailers have grown their share. They now have close to half of the total dollars spent online. Fashion, electronics, home and garden and beauty are driving the big growth in the overall number of people shopping online. Fashion is the biggest category, followed by electronics. All categories have experienced big growth over COVID, especially beauty. While it's a smaller category, it jumped by 300%. Just 12 retailers account for almost half of all online spending, with Amazon and eBay at the top, along with the iconic, as well as familiar powerhouses, Kmart, JB Hi-Fi and Target. Retail is the most trusted industry in Australia. Retailers dominate the most trusted brands of 2023. 14 of the top 20 most trusted brands, and that's across all industries, are retailers. Retailers, supermarkets particularly, and those very large and familiar retailers such as Bunnings, Kmart and Myer, built up goodwill over COVID as they played a critical role in the community, literally keeping us fed and clothed at a time when we were completely reliant on them to keep us going, to deliver, quite literally. Retailers are almost completely absent from the top 20 most distrusted brands for 2023, except for Harvey Norman. This list is dominated by technology and social media companies, including Amazon. Looking now specifically at non-supermarket retailers, Bunnings and Kmart top the list. While only Amazon made it onto the top 20 most distrusted brands, a new entrant, pure-play Chinese fashion retailer Shein, is also on the most distrusted retailer list. Sustainability is at the top of the agenda for business across all industries, including retail. But how do consumers feel about sustainability? What are they doing and what are their expectations of retailers? The following data comes from research that we conducted for Salvo stores. A majority of Australians are thinking about sustainability when it comes to how they shop and consume. Almost 9 in 10 believe we should all try to recycle and upcycle clothing and household items more often. And 3/4 worry about the volume of old items going into landfill. And close to half are more open to buying second-hand items than they used to be. As a result, the circular economy is thriving, with 6 in 10 or 12.7 million Australians buying second-hand. And most of those either sell or donate their old items, hence the circular nature of the exchange. The majority of second-hand products are bought at op shops and online. Among online channels for second-hand products, Facebook Marketplace has the strongest foothold, followed by eBay and then Gumtree. Many Australians, 61%, believe that big retailers could do more to contribute to environmental sustainability by selling high-quality second-hand items. Almost half are open to buying high-quality second-hand and pre-loved designer items from some of our biggest retailers like David Jones and Myer. Some big retailers are already testing the waters around the circular economy by partnering with digital platform Airrobe to offer customers a seamless link to the online resale marketplace. Working with Airrobe allows customers to list items at the time of purchase to later resell or even rent those items on Airrobe's marketplace, all with one simple click. So what lies ahead for retail sales? Following the growth in sales over 2022, Roy Morgan forecasts a flattening where growth stays mostly in line with inflation. At this stage, we don't see a spending cliff materialising, but rather a gradual decline in growth to meet inflation this year and potentially dropping slightly under, rather than a plummeting, before coming back into a more predictable alignment. While the economy and consumer spending continue to rebalance, retailers need to stay ahead of the fast-moving parts that underpin what is increasingly being recognised as a two-speed consumer economy. This is the kind of consumer psychology market intelligence that Roy Morgan uniquely creates for retailers and for the Australian Retailers Association. As a famous social scientist once said, no one knows more about the Australian consumer than Roy Morgan.